Welcome back, guys. So based on the previous videos I've been dropping, I've been getting a lot of questions. How do I analyze the market from an higher time frame? I'm a swing trader. My stop loss is 50 pips, and I'll be like, wow. Because you're using it doesn't mean you should actually have to use the very big stop loss. Right? So today I'm going to be showing us something called redefining your entry, basically. How does this work? How you can actually see a buy on 4 hours and actually still pick your buy entry from as low as 5 minutes, 3 minutes, 15 minutes, and actually be able to reduce your stop loss to the minimal and still have the same rewards you actually want to get on the 4 hours. So let's just jump into it. I'm going to be showing us a bit with diagram on the board. Then I'm going to spend a little time on the chart also to show you how it is being done. So let's get right into it, right? All right, so when talking about trading the higher time frame, you actually get your direction, right? So I have on my body a direction and entry. Basically, you get your buyers from the higher time frame, let's say from the monthly or the weekly, the daily, or the 4 hours. Basically, that's the H4, depending on what type of trader you are, basically. So I want to actually show you something you might not have actually discovered before now. But when you have something like this, let's say we have a downtrend, for instance, right? You have from a high to a low. They have a lower high, lower low. So I'm going to label it. This is H, this is L, this is LH, right? And this is LL, which is lower low. So now the next lower high, right? Now take note of this, please. The market is doing this on the 4 hour time frame. Let's say this is the H4, right? This might be a 1 or 2 candle move or a 3 candle move, basically on the 4 hours. But when you drop down to the entry time frame, which I call so I call this the anchor time frame, which is the time frame you get your direction from. Why I call the M5 the entry time frame, basically entry. So now this move here, obviously when you're entering a sell, you want to enter a sell from the lower high area, right? Now how do you get this move, right? To actually have a good entry on the lower time frame, right? What you want to see is this move here on the higher time frame is an uptrend on the lower time frame, right? This move here on the anchor time frame, which is the 4 hours, is an uptrend on the entry time frame. So how do I know when to enter? All I want to see is market change from an uptrend to a downtrend, which is called a change in market structure, which is called CHOCH. Change of character, basically. Market changing from an uptrend to a downtrend. What happens is when price breaks below. So this uptrend here is obviously a low to a high. You have the higher low, higher high, higher low, higher high, basically. So this is the last higher low that was created. So when price breaks below the last higher low that was created, right? The tendency of market changing from the retracement is actually about getting to an end. I'm about to change the direction from the retracement to a downtrend. So I'm going to pick my entry at what? The zone that propelled this structure break from an uptrend to a downtrend. So obviously there will most likely be a supply zone at this point, or an order block, or a resistance, depending on whatever you're actually trading, right? All you need to do is wait for what? A retracement. So a retracement on this point will actually give you a good entry with your stop loss above this zone, which is going to give you a perfect entry at this top point. So we're going to get a perfect at the top point. So when market is giving you a retracement on the higher time frame, it's an uptrend on the lower time frame. All you need to do is to look for what? A break of structure, a change of trend, right, from an uptrend to a downtrend, and wait for a retracement. Then you pick your entry. So you can either pick your entry from the first retracement, or you have market to break structure again and pick your entry from the second retracement, right? So let's get on the chart. Let me show you how it is being done. All right, welcome back on the chart, and now let's get down into business, right? So up on my front here, I have the Euro USD up on my chart. So if you look at this Euro USD, you can see market was normally in a downtrend, but as you can see here, market has changed from a downtrend to an uptrend because I now have what? I have a low here to a high, a higher low, forgive me, higher high. Now you can see we actually have a retracement here. So I'm going to start with this point and I'm going to get into this also. So let's just get started. Right now, as you can see on this chart here, up on this chart at this point, I have just 2 sell candles right at this point, right? But if I drop down to my 15 minutes or 5 minutes, you're going to see that that box I just showed you now is a clear downtrend, right? It's actually a perfect clear downtrend, as you can see here. Let me zoom in closely for you to see, right? So here, you can actually label it the way I said earlier, right? We have from here, high to low, higher, lower high, lower low, lower high, lower low, right? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, and as you can see here, price increase to lower low. But what do we have? Market broke structure to the upside, right? Market broke structure to the upside, as you can see clearly here. Market broke structure to the upside. Next thing you want to do is what? You want to pick out your zone, like I said earlier. You want to get your zone, and how do you do that? Basically, what prepared the break of structure, right? We can see clearly here that this guy here prepared the break of structure. The nice order block you can see here, right? This nice order block here prepared the structure break. This one here, right? Right, structure here prepared the break of structure. As you can see after shoulder block, the last sell candle, the market made a push to the upside, is the order block candle, which is this black candle here, right? So what do we have? We wait for price to come back into the candle, which is what happened here. So we're looking to buy from this point to go long from the top of the order block candle. The stop loss will be below the low of the zone, which is this low here, the last low market created here, right? I might take profit to be where the high on the 4 hours, right, which is this high market created at this point here, right? So let me just take out the box for us to see clearly, right? Zooming in, you can see my take profit to be this high here, right? The high market created before the retracement. As you can see perfectly well, when price came back into it on the 5 minute here, when price came back into it, we had a massive push to the upside. Let me zoom in for us all to see. Here. Right? I came back into this OB candle here, this other block candle. Wow, what's mine? How can I see myself? Okay, here it is. Alright. Visibility. Let me make a bit brighter for us to see. Alright, can we see this? So entry at the top of the order block, stop loss below the zone, right here, right? I might take profit to be my 4 hours high market created before the retracement. I know price will go higher, but here, right, before the retracement will be my first take profit. Now, can you imagine what this is going to be like on your chart? Very, 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 very perfect setup. Right, this is stop loss is 1 minute. Yeah, I think it's 8 pips. It's 2 ratio, 5 ratio basically. Right, this is ratio 5. This is ratio 5. Let's see. Wow, this is still a lot. A bit below the low. Yep. Yeah. I think this is more like it. My entry, yep. I have 12 pips stop loss, 13 pips stop loss to make 80 pips. This is 81, but 80 pips on the dot basically. So this is a perfect setup, as you can see. This is more or less like 1:6 all together basically. So imagine now, if you go on your 4 hours and I try to take your entry from your 4 hours, you might not get any entry until you see probably a confirmation candle, either an inside bar, which is what we actually have at this point. Right? This candle open and close within this guy, but minimizing and modifying your entry to a lower time frame actually gives you a perfect risk to reward. So I think with this few points, I've actually been able to show you how to streamline your directional bias and your entry bias. So get your bias on the higher time frame. It could be daily, it could be 4 hours, it could be monthly, it could be weekly, but your entry should come as low as 15 minutes or 5 minutes so I don't have a very large stop loss. Ideal stop loss should not exceed 10 to 15 tips. Right? So keep trading, keep practicing, and don't forget to backtest whatever I actually teach you before you actually implement it on your chart, because it's what you know for yourself that's actually going to pay you, right? It's actually for educational purposes alone, right? I've tried it, it's working, while I'm putting it out for you to actually use it, right? Keep trading. MGTS, profitable trading is fun.